Hi, everyone. This is Basil Chapman, the host of the Tiger Technicians Hour at noon every day and the author of the Opening Call, a daily newsletter here at TFNN, sitting in for the one and only Tom O'Brien is in Chicago at the Traders Expo. So it's my pleasure to be here. And what a session we've got here. After the market, Google came out with earnings, Alphabet earnings beat $11.75 per share versus $9.59 expected EPS. Ooh, it is trading up 78 points right now at 1262 in a leg D in the Chapman Wave methodology. And let me just quickly go through what we look at here based on my methodology. Within the context of markets, I'm always looking for the most obvious lowest low and merely count each successively higher peak, alphabetize them on the way up. Uppercase A, the next peak is B, the next peak higher is C, next peak is D. It can go all the way to a G, but the fourth highest peak is where other things can happen. What do I mean by that? Let's get out of this and I'll show you exactly what I mean by that. The last peak D on June the 20th in Google was at, that's Alphabet, I always like to say Google. Alphabet is at 1186.29. It comes sharply low, it goes under 1100, and then it starts a brand new buy mode. You see these technicals here on the left side chart, the daily chart, the MACD, the moving average convergence, divergence crossed positive, stochastic went positive, and now it is in leg D once again. It is in leg D in the weekly chart. It is in leg F, or it could be an alternate wave count, in the monthly chart, and the technicals in all situations are very good. So it'll be how Alphabet or Google really responds to the, there'll obviously be a call that's everyone's listening to, but most importantly, what does it do between now, Monday, and say Wednesday afternoon, Thursday? Does it give back some of the gains as it did once before? Back that was on the 20th of June, or does it continue higher? That's going to be the big question. Now we can go through the market. Look at this. The Dow closed today down 13 points at 25,044. It's made a peak C. It has gone to a D before. Back in June the 12th, it went to that leg D at 25,402. Comes down to a trough D on the way down. We call them troughs and use lowercase letters. And at 23,997 on the 28th of June, comes all the way back and is now in at a peak C. We'll see if this week it's able to get above 25,215 for that missing leg D. But the weekly chart isn't anywhere close as strong as you saw when we were looking at the weekly chart of, say, Alphabet or Google. And the monthly chart is improving. It is good, but it's not as good as Google. And here we go. The S&P, now there was a divergence there. The S&P, I have a technique that said that there should have been a rally today from the lows and the E-minis of 9 to 11 points. We got that. And it closed up 515 at 2806.98. Has made a peak D, but we're holding very nicely with the MACD. It's what happens with the MACD, the moving average convergence divergence, and the slow stochastic over the next few days. That's going to be very important. And we've got a leg D in the weekly chart, and the last weekly peak D on the 29th of January, that was 26, was the actual day, at 28.72, took quite a dive down to the 25.50, I think, let me just see here. Whoops, just disappeared. Well, it went down to 25.32. Now, this is going to be very interesting. Why? Because the QQQ obviously is being impacted here, up $1.57 at 180.56. 180.65 was the previous peak D high of 5 days ago. It's probably going to take that out tomorrow if Google holds very well through the night and into tomorrow. I will see. The last high that was made on the 20th of June was a peak D, the fourth highest peak at 177.98. All very important because the weekly chart has also got a leg D right here. So and the monthly chart is still very strong. So IWM, this is the Russell 2000, which at some point going into June was really leading the markets and has really been very weak since then, holding quite nicely, but hasn't been leading. So at 168.84, the Russell 2000 iShares ETF is really stuck between, if it can go from the 168.84 level that it's at right now and can push into the 170s, that's going to be a big positive. We'll watch it real closely. Now let's go to gold. Gold has desperately been trying to rally. It's down 6 right now, 1224. This is a very important phase because the weekly chart, as you can see here, has made an arch formation, taken out the left side low that was very important of December of 1254. It's trading now 1224, and the monthly chart has broken key support. I'm going to be watching this very closely because you would expect a counter trend bounce at least in gold. But look, the silver's doing the same, down 15 at 1539. And really, what's the issue? The issue is that the dollar is holding very nicely. Not great, but holding well. It's in a sideways consolidation at the weekly chart, the middle chart right here. You can see holding very nicely. If the dollar goes underneath 93.25, then you're in for a longer period of a consolidation. That'll help gold. And at the same time, any push in the next 2 days above 95.30 says, nah, the dollar's leading. The dollar's telling us a story. Look at the EUR. Let me just do that. EUR USD. That is the euro-dollar currency pair. Basically, it's the euro. Not doing very well, stuck in a range at the bottom. If you look at the weekly chart, it's at the bottom of the range. The dollar was at the top of the range. And what is really fascinating is that the yen, the USD JPY, that is the dollar yen, is pulling back after a pretty good, healthy run to 113.32. It's down to the 111.40 area. So we'll watch the yen because very often it trades in sympathy with the dollar, not necessarily in points, but in direction. So watching this closely, it needs to hold 110. And if it can get to the 112.25 area, that's going to be very good. Crude oil, crude oil. It was the leader for a while, went to the 74s, and now trading at the 67s. It just looks stuck in a range. I don't think it's in a breakdown, but it certainly could trade between 72 and 63s over the coming couple of weeks. And most importantly, we're going to go to this is important. You see the iShares 20-year Treasury bond ETF. Look at that plunge to the downside. And that says that yields are rallying towards the recent highs. We'll talk about that as soon as we get back. Let me see, where's Google right now? Google is up $80, $79.59 at 12.64. Whoa, what a move. I'll be back. Basil Chapman, sitting here for the one and only Tom O'Brien. Be right back after these important messages.